And welcome back to the virtual investor conference. Welcome back to those of you who've been on the last couple of sessions, and welcome to those of you just joining us for the first time. Let's get cracking. Our next presentation will be from Mighty Craft. We've got Managing Director Mark Haysman and Andrew Syme, the CFO, standing by. They'll give a presentation and, of course, at the end, available to answer your questions. So if you do have any, just pop them in anytime during the presentation or afterwards using the Q&A box. Just a little introduction. Mighty Craft is an Australian-based craft beverage accelerator. So it's operated by a group of leading liquor industry professionals, and it's focused on fostering emerging craft brewery and distillery businesses. It invests in select craft beverage businesses alongside their founders, and then accelerates that growth through the provision of capital, sales and marketing, supply chain management, and also an interesting part of the Mighty Craft group is this operation of branded venues where some of those products can, of course, be tried. One of those, they've also recently announced the launch of Craft Hub to open supply chain solutions to the independent craft beverage sector, and partnered with Kangaroo Island Distillery to develop a world-class experiential distillery at Cygnet River, which has now attracted $500,000 in South Australian government funding. So don't forget your questions, and I shall hand over now to Mark and Andrew.
Thanks, Kylie. Good morning, everyone, and welcome to an update on the half year for Mighty Craft. I'm the Managing Director of Mighty Craft, and I've got Andrew Syme on the line as well, who's our CFO. So welcome. We'll just take you through a quick update on where we are with the business, and then we'll open up to questions at the back end. So as you may remember, we came to market and listed on the boards December, just over a year ago now. So for our half year just completed, key themes, very strong growth. So 13 million of income coming through at the half year, which is 185% growth on the same period in FY20. The earnings result, so obviously we're loss-making early stage at this juncture, and as you'll see, on a path to profit back end of FY22. So looking forward to that stage of our journey as well. But high growth, strong net asset position at the half at 35 mil, and cash on hand at 16. And when we get into the detail of the results, Andrew will explain. It's been quite a heavy quarter for us from a cash flow perspective, as we've changed over to the new distributor operating model in partnership with BevChain, which has had a bit of an impact in that quarter, which will even itself out over the balance of the year. In terms of the growth, very pleased with the growth. We obviously are focusing on really accelerating the growth of the businesses we invest in. The highlights for us, overall, the wholesale growth at plus 103%. Beer outperforming the category quite significantly with growth at plus 85%, and spirits and RTDs really coming to market strongly now at plus 190% growth. Importantly for us, we expect the spirits growth to continue to accelerate, and whiskey coming to market in the second half as well under both Kangaroo Island Spirits, which will be the first whiskey coming off Kangaroo Island, and also our Tasmanian whiskey venture as well, in partnership with Chris Malcolm, formerly of AWH. So during the half, we deferred some updates of some of our venues, but we did actually refurb and launch 5 venues in the half. So a lot of work done by the team there. Very important for us to drive cash flow, profit, brand experience, but importantly, as we get many thousands of people coming through these venues, to capture their data and be able to market directly to them going forward is a very important part of the ecosystem that we're building. The new distributor model I touched on, this partnership with BevChain, very important to solve some of the big structural issues within the industry, such as cold chain logistics for craft beer, which no one's been able to crack in any scale at this stage, and we are, in partnership with BevChain, dealing with that. Also, our digital transformation agenda made some good steps there, not quite as quickly as we'd hoped to, which has probably contributed to fairly strong overhead for the half, which is really a big focus for us over the next 12 months to get that to be more efficient for us, leveraging technology and that BevChain partnership to ease off on the people front. So some significant projects under our Path to Profit journey. So continuing to execute well against that plan. You'll see some benefits flow in H2 of that. But the key themes coming through, craft continuing to grow and grow strongly. Independent craft is fueling that growth, whether that's beer, spirits, or emerging drinks such as seltzer. And the industry consolidation on the back of COVID, in our mind, is only going to continue. The consolidation is going to be there, and we expect to play a key role within that. So, yeah, strong second half ahead of us, which will give you a bit of an outlook view towards the back end of the conversation. So over the page, in terms of the half-year highlights, scale starting to really build now. So from one investment in Jetty Road when we first started to now having 11 spread mainly across the eastern seaboard, half a dozen in beer, 4 in spirits, and one through our Torquay Beverage Company investment, which is our incubator for emerging drinks such as seltzer, with Nosh coming to market, been very strong. So the sales volume for the period, again, significant growth, both on the beer and spirits front. So just under 1 million litres of beer coming through the network, starting to ramp up the spirit side of things as well. So growth I've touched on. Importantly for us, we must continue to outperform the category. We're doing that very comfortably, 19 times category growth. Exceptional result by the team. And really helping our partners scale up and do that very quickly. So strong balance sheet, cash on hand, the earnings result I've talked to, but Andrew will comment on that shortly. P&L, Andrew, do you want us to touch on this?
Sure, thanks Mark. Well, just step through quickly P&L, balance sheet, cash performance. As Mark mentioned, obviously the growth rate is very pleased with that, 185% growth, about $13 million of income for the half, and that's on a previous year number of 4.5, so close to 200% growth. We expect that to continue in the back half, which is very pleasing. I think from a profit point of view, we did have a significant transformation half, so the EBITDA line almost 5 million loss for the half. I think it's worth mentioning that, there were 3 key transformation projects that were ongoing through half one. We cut over to a new operating model where Mighty Craft is now effectively operating as a distributor for all of our partners. So that entails us owning the stock and presenting one face to the customer, which is very important competitive advantage that we have, and simplifies the retailers world dramatically. So a significant shift there. The partnership with BevChain, again, very important for us going forward. It's the first national cold chain logistics network in the country for craft. And again, that is going to be a key competitive advantage and growth driver for us going forward, along with some significant investment in the digital infrastructure of the business. So setting ourselves up basically to seamlessly grow going forward. So I would say a significant transformation half. We're very focused on the bottom line and our path to profit. We have called a break-even point for the first time, which is half 222. We've got a very structured plan around that and a clear path to getting to that point. And we're very focused on doing that. I think some key things around the profit line that will start to come through in half two. The spirits growth, the spirits portfolio is already profitable. We've got some significant distribution gains coming up through March and April, which we've announced to the market. So as we drive more and more through the spirits business, we drop more and more money to the bottom line. So we will start to see that shift in the back half. Our venues coming back online post-COVID, again, good cash flow for the business, and starting to really drive digital efficiencies across our business. So yeah, we will start to see an improvement as we track towards that break-even point, half 222. Quickly from a balance sheet perspective, again, headlines, we are well funded. We've got $16 million of cash on hand. which I think leaves us well placed for the next 12 months. And you can see in here a number of impacts from the operating model it's worth touching on. So across the receivables, inventory and payables line, you can see significant jumps in the half. Again, that is driven by the switch to the new operating model where we are operating as a distributor for all of our partners. So again, a key part of our model and growth plan going forward. And that is how we're making the retailer's world a lot simpler, and that will be a key competitive advantage for us going forward. So they're probably the key headlines from a balance sheet perspective. Cash flow, again, very quickly, we're well funded, we're well positioned for the next 12 months. The operating cash flow was impacted by the cutover to the new model. Obviously, purchasing stock within the half hits that operating cash flow line, so that will improve as we go into half two. So that's probably it from a financial point of view. Again, the growth is strong, very pleased, and very focused on the path to profit and break even half 222. So I'll hand back to you, Mark.
Thanks, Andrew. The key measures that we like to show each time when we report to make sure we can show our continued growth and momentum. So cause and effect here. So you have to drive the distributions to get the sales. So you can see the number of distribution points driven by the sales team, which is clearly one of our strengths in the market, plus 104% on the number of distribution points. So a very strong result by the team. And the sales growth is lining up with that. So, and in fact, you'll see a little later on in the deck, as we've started to invest properly into brands now and building the brands out, we're also seeing the velocity or rate of sale of those products per distribution point go up as well. So, which is a key part of us really accelerating the growth of these brands and capitalising on the good job the sales team has done to get the distribution points. So growing and growing at a quicker rate as every quarter goes by. So over the page, for some of you that are new to the story, you know, what do we do and why? Well, we solve a bunch of problems for the industry, and you know, there's over 1,700 independent breweries or distilleries around the country. They're typically it's a highly fragmented market. Most of them are suboptimal in terms of scale, highly inefficient, may make a great product, but they have a lot of gaps. And a lot of the businesses we've invested in to date have been loss-making early stage, and we're really unnaturally growing them. There's a couple that are now you know, strongly profitable as well, but typically these early stage businesses have these types of problems where they can't access the market, get the right relationships with the key customers to drive growth. They don't have the access to capital or the right capital. Their cost base is too high because they don't have the scale and can't drive efficiencies. And a lot of the time they don't know how to really play a role in leading the category and helping grow that for the retailer. Obviously, one of our strengths is dealing with the strongest retailers in the country, and the fact we have a joint business plan in Coles, I guess, is testament to the calibre of our team and working through a similar process with EDG right now. So one of the biggest strengths of our team is our industry experience, literally over 150 years. Some of us have been in the game for a long time. It's starting to show, but an amazing team and can really bring leadership to this category and help those we invest in to grow their business in the right way. So we solve a bunch of those problems. I guess we really focus on that because you can see over the page that it's a big profitable market. It's continuing to grow. Whether you look at beer or spirits, both are hot sectors, are lagging behind the US in terms of growth. And there's a big market to participate in. It's a highly profitable market. You know, back in the day, SAB Miller bought Foster's. They bought it because they wanted access to the most profitable beer market in the world. It's been a very well managed market from a profitability perspective, and craft is only helping that now. So some strong growth ahead of us, a lot of headroom in both beer and spirits. So over the page, you can see that we've, I guess, called out our ambition. So unashamedly, we are keen to become Australia's strongest independent craft drinks collective. So really about unleashing the growth of these amazing drinks, local beer products, spirits and emerging beverages. And for us, it's not just putting the growth capital in these businesses, it's actually providing the leadership and bringing the operational expertise to really help these businesses grow and get their P&L in shape as we do so. And ultimately, we want the whole sector to grow and thrive, because if we do that, it's going to be good for our retailers and our customers. We are always customer centric, and we need to be to make sure we're meeting their changing needs. But if we grow and thrive the sector, that's going to be good for our brands and the industry more broadly. So our 2025 ambition, it's a big ambition. So potentially, 10 to 12 sort of beer or cider brands with scale. So, in excess of 12 million litres coming to market there. On the spirits side, over 500,000 bottles of spirits coming to market on an annualised basis, which would see us having maybe 5 to 6 spirits brands and businesses within the portfolio, and then having a bunch of whiskey down as well. So, it's always been a sequenced agenda in terms of execution of our strategy, but launching our first whiskey out of Kangaroo Island through Kangaroo Island Spirits, but also the Tasmanian whiskey we're bringing to market, which is going to be particularly high end and will be to market middle of this year. For the first time, we've called a break even. Obviously, it was a fair cash burn for the half. We are investing in a team that can run a much bigger business, and we're very confident that we'll be a much bigger business pretty quickly. But we have called a break even. So 4 million litres of beer/cider will see us with just over half a dozen brands in the businesses in the portfolio from a beer cider perspective. And from a spirits and emerging drinks, 5 to 6 potentially, but 150,000 bottles of spirits by the back end of 2022. High profit, as Andrew identified, certainly on spirits at an earlier scale or an earlier stage of a business's life, heavy profit attached to spirits. So you'll see that's quite a big focus for us over the next 12 months as we execute our path to profit plan, really exploding a couple of these brands that we have and relaunching them to the market is a big focus. And whiskey barrels down. So we should have over 500. We suspect quite a few more than that by that time, and is an ongoing focus as we do that down in Tasmania as well as in South Australia on Kangaroo Island. So we call that break even so people can get a bit of a feel for where we are. So it's a big ambition, a strong leadership agenda for the broader industry, and I'll come to why that's important shortly in a bit more detail with Craft Hub. So our business model, most of you have seen this, but Mighty Craft, we put ourselves right in the middle of the industry there between the craft producers that we invest in and our customers. Customers absolutely key to us because they determine our success at the end of the day. We take a top-down approach and work with the top end of town through EDG, Coles, LNG and IBA, etc., to really look after those guys and girls, but also the edgier, pointy end of craft in the independents as well, and to really perform there. So once we've invested in these businesses, we commercially accelerate the growth, which you've seen through the results we've achieved, typically starting with channel and sales management, going back through supply chain, general management oversight, and now into category and brand investment, as well as digital commerce and venues. So an offering that we charge a service, with these services we charge for, clip the ticket on the way through to help cover the cost of our sales and marketing overhead, and in time they will become profit centres in their own right. The proprietary assets we're building down the bottom, we own the customer relationships. So for example, with Coles, that's our relationship to own, and we bring the brands through there to meet their needs in their each of their different banner groups. That's a similar approach that we take across the board, given we effectively play that distributor role for these brands as well as owning a stake in them. Over time, as we get the e-commerce to underpin our business, the data we get and the connection to the consumer directly through our retail and venues, very important to be able to market directly, and our national logistics network as well in our alliance with BevChain, able to add value to our brands, but more broadly to the industry. So some key initiatives underneath that will create value to Mighty Craft beyond the brands that we invest in. So how do we make our money? The economic model is pretty clear, where we own a majority stake, which is in most of the businesses now. I think there's two minorities and the rest are basically a majority stake or a path to it. So we consolidate those results in. In terms of the licensed venues, obviously, again, we consolidate those results in, very important in terms of capture of the data. The solutions we provide, whether it's sales on the wholesale side, whether it's digital, whether it's the venue management, we charge for that solution and get revenue in through that, regardless of our ownership stake. And obviously, the sleeping giant for us is the value that we're adding to the businesses we've invested in. So we've done some work in the background on the investments we've put into the businesses, what we paid at the time and the valuation, and what it is now based on just normal, regular industry multiples. And whilst that doesn't appear on our balance sheet, it's a significant uplift, a material uplift in the value of our investments. And really, I guess that will only come to bear down the track as maybe we sell a brand or a business off, or sell down a stake in one. So, significant appreciation in the market value of these businesses as we grow them. So that's our economic model, how that works. In terms of our portfolio, a strong and increasingly relevant beer portfolio to market, covering all key sectors from easy drinking to the more challenging styles. The stars within the portfolio at the moment, as I said, the beer category growing at double digit. Our growth for the quarter, 85% from a wholesale perspective. Jetty Road performing extremely well, which I'll show you a bit more on shortly. Ballistic having relaunched their brands up there in Queensland, had 5 in the top 100 of the Gabs recently. David and the team doing a terrific job up there. But all of the brands growing strongly and out-indexing the market. But probably Jetty Road, Ballistic are our stars at the moment in terms of really high growth. Over the page, our spirits portfolio is something that we're really proud of and very excited about what's ahead of us in the next sort of 3 or 4 months, especially. Kangaroo Island Spirits, we've got a one-pager on, but it is amongst the most awarded Australian gin brands in the country. It's really unheard of on the Eastern Seaboard, so we're looking forward to telling you more about that. Brogan's Way here in Victoria is a fabulous brand, and Brogan herself, a very talented distiller, and very much looking forward to seeing that become a stronger brand within the Victorian market and for her to play a bigger role in the industry going forward. Green Ant Gin, we're especially excited about this. This is the business that we have Daniel Motlop and his family on the other side of. So we have 65% of this business. It will be relaunched to 7 Seasons in the coming weeks, being the 7 Seasons of the Larrakia people from the Northern Territory, which is where we harvest the native ingredients going into this product. So Green Ant Gin has a green ant in the bottom of the bottle, a bit like the worm in the bottom of the tequila bottle back in the day. This product is going to get significant ranging uplift as we relaunch under 7 Seasons over the next 3 to 4 weeks, as in over 1,000 additional distribution points. We have 2 new products coming to the 7 Seasons range beyond Green Ant Gin as well. So very well supported by the retailers, an amazing backstory, and great founders to work with there. In terms of ready to serves, the Spark products, terrific products in terms of brewed hard lemonade, ginger beer, and also the cider. But Nosh, which is our seltzer, is doing exceptionally well in market at the moment. And Spruce, which is a cold hard brew of coffee, which is really exploding in the US as a category. So first to market in Australia there as well. Both of those products, Nosh and Spruce, we have over 1,000 distribution points. And you'll see that Torquay Bev becomes a much bigger part of our business going forward as well. So a strong portfolio, spirits, more news to follow on that. A couple of case studies, and then we'll come into the questions. Jetty Road is our first investment. We took a stake in that back in December 2017. Our current stake sits at 67%. Once all the notes are converted, we're at about 73%. And we are showing strong growth in this brand. We've invested about $4 million. You can see that for the full year, we're likely to do about 550,000 litres, which is nearly 5-fold on 2 years ago. And the top line at around 5.6 mil, and the bottom line is almost to break even after what last year was a big loss. So this shows what you can do when you really explode these brands and you get to the other side of about 650,000 litres, and you really start to get an exponential profit. So very strong. Excited about that brand. It really has had a 2 or 3 very strong months, and we expect to see the back half very strong for Jetty Road. In terms of Kangaroo Island Spirits, on the spirits side, this one equally exciting. We paid $1.5 million for this business just over 12 months ago. At the end of last year, the brand turned over about 3 million, dropped 400 to the bottom line. For the full year this year, we see it doing just under 5 million in revenue, and really strong profit result. And that's before we've relaunched this brand. It was in the running for the International Gin Distillery of the Year in London. That was awarded to 4 pillars. And the company we keep in regard of the quality of this product is unparalleled. So really looking forward to the investment in the distillery over there on Kangaroo Island, about $3.5 million to build the distillery capability, the cellar door. We got $500,000 from government in SA, which we're grateful for, to help with that investment. And we can now really push harder into the whiskey space for Kangaroo Islands as well, and putting down about 400 barrels a year. So that looks like it's going to be an absolute winner for us, and you'll see a lot more news in the next 6 months on that. So in terms of brand investment, some significant investment in brand now with Yolanda coming on board as our marketing director, ex-Coles and Dan Murphy's, and really using digital to drive brand awareness. Some examples there, really innovating within the category, and MPD to drive growth. You'll see with the Spark brand there, they've innovated during COVID and come to market with the Full Circle Spirit, which you'll hear more about shortly as well. A female winemaker, brewer, who's now pushing into spirits, a wonderful product. And using the venues and the retail to drive loyalty in a very different way. Our partnership with Upstreet, which is fractional shares, very exciting and driving some strong growth. From a sales perspective, over the page, you'll see that our team's done an awesome job. National field force, strong leadership, working with the customer and activating really strongly. These sort of displays, since when I was at CUB, I used to see these displays week in, week out. There wouldn't be many craft businesses in Australia, if any, that are getting this sort of support in the likes of Dan Murphy's, BWS and Coles. Team's doing an incredible job and making these brands look a lot bigger than they actually are, and that will ultimately become a self-fulfilling prophecy. So well done to the team. In terms of the new news coming to market, Craft Hub, I won't spend a lot of time on this right now. This is revolutionising the supply chain for independent craft. Cold chain storage and supply chain for craft beer is a massive challenge. The best way to think about this business is what Digital Wine Ventures is to wine. This is what we're going to be to craft beer and spirits. Technology-led, leveraging our relationship with BevChain to create a scalable solution that supports our brands, but also supports the industry more broadly. So very exciting opportunity. Ben Adams just been appointed to head this business up for us, set up separately within our network. Very exciting opportunity for us. In terms of the outlook, strong growth in the second half, spirits becoming a bigger part of our business, the relaunch of Kangaroo Island Spirits, as well as the development of the island there for more production, Tassie Whiskey coming to market and 7 Seasons being launched. Some significant growth in the spirits sector for us. Torquay Beverage Company, which is Nosh and Spruce, also growing strongly, and doubling down on Jetty Road to fuel the next phase of growth. At the same time, really pushing hard with our path to profit, increasing spirits mix important to that, in-house production, digital efficiencies, and then Craft Hub coming to market, which will support our brands, but importantly, provide a solution for the sector more broadly beyond those brands we own, which we can then monetize. So some big program plans for the second half. We're well on track executing all of those, as you'll see at the next quarterly update. So thanks for listening. Happy to take any questions.
Thanks, Mark. I have to say I'm a bit of an expert on Mighty Craft. If you watch Ausbiz on a Friday afternoon, you'll usually see us standing around having a Kangaroo Island or a Jetty Road. So do tune in. But look, we're running pretty close to the wire on time. So let me get straight to a question from Chris. You have touched on this, but just a bit more detail, if you could walk us through the path to break even at EBITDA level and just tell us what that looks like.
Yeah, sure. I think, the key elements of that are, our shifting, our growing focus on spirits to get more of our mix coming through spirits. with scale in beer and in-house brewing, you can really accelerate your path to profit there. So they're two really critical elements. Obviously, as we use the digital economies of scale coming through our network and our relationship with BevChain, we get the opportunity then to skinny down our overhead corporately as well, to really refine the team we have to take on a bunch more brands going forward. So some key items on the agenda there for us, and we'll also be looking at, we are an acquisitive business as well. So if we have the opportunity to buy a strong business with strong revenue and profit to bring into our network to help with our production efficiencies as well, with brands that we think have a lot of growth ahead of them, then we'll also look to invest in that regard also, which helps accelerate our path to profit.
Mark, you touched on this in your presentation. You did mention digital wine ventures. Could you just give us a bit more colour, a little bit of a broader explanation around the cold chain logistics solution?
Yeah, I mean, the cold chain logistics is a burning issue for the industry in terms of craft beer. Most craft beer is not pasteurised, so it needs to be fresh and it needs to be looked after all the way from the brewery to the end customer. The focus for us with our alliance with BevChain is to help support our own brands, but then the opportunity for us to open that network up more broadly to the craft community to provide that benefit as well. So that's what we're working on. It's a unique need. We're working hard with Misha and the team from BevChain, obviously part of Linfox, with our alliance to open that up. So you'll hear a lot more on that over the next 2 to 3 months. And with beer, we'll get that going, and then we'll push more into spirits as well. So it will be tech-enabled, similar to the way that Dean and the team of Digital Wine Ventures have done. We'll be doing the same thing for beer and spirits more broadly for the industry, but at the same time providing that service, which helps bring our cost to serve down for our own brands as well. So a really exciting development and growth phase for our business.
Great. Okay, Mark and Andrew, thank you so much. We will have to leave it there and get on to the next presentation. To all the attendees, thank you so much. We'll see you at the next one.
Thank you, Kylie. Thanks, everyone.
Thank you.